Okay, here is a trade that we have just entered. I started the video a couple of minutes late. We bought 4 contracts up there at 11:02:25, and you can see within just about 2, 3, 4 minutes, our first objective was hit. And so that's why you only see the 2 contracts. Our basic position is always 4 contracts, and our initial stop is 6 ticks. So the long entry here at 11:02:25, our initial protective sell stop was at 1100.75, and as soon as that first objective was reached, in this case when it moved from 11:02:25 up to 11:03 and filled us, our position went down to 2 from 4, and our stop also went down from 4 to 2, and the stop also increased in price from 1100.75 to 1100.50. So our risk now is 3 ticks on half of the position on 2 contracts. We have already been filled at our first objective on 2 contracts for that same amount. So should the market now turn around on us and sell off and dip down and hit 11:0150 and stop us out, then we would have a break even on the trade, less of course the cost of commission, because we've already made 3 ticks on 2 contracts. If the market were to turn around and hit 11:0150, we would lose 3 ticks on 2 contracts because we're long from 11:02:25. So worst case scenario right now, if the market were to turn around, we'd end up with a break-even trade less the cost of commission. So what I usually like to do is that if the market, after about 10 minutes, I'd like to adjust the stop. This is particularly true if we have not reached our first objective. In a lot of cases, we will take into consideration some other structural evidence in the market as is developing during the day, but generally speaking, we will, once we've hit that first objective, we will just allow the stops to take place. I may adjust it here on this particular case should it get up close to the 11:0375 area, just because this is a pretty good support. You can see now when it came down and hit our price, our entry price 11:02:25, it hit right on the dot and filled us. Now that doesn't happen all the time. It just depends how much volume actually occurs right at that price. Today it happened to fill us. So there's a blue up arrow just where it's with a little blue tag that says 2S, sell S2, where our stop is. Just below that blue tag, you'll see the bottom of our blue up arrow, and that's when this trade was actually set up. So in other words, at the close of that bar, when that blue arrow actually showed, we went ahead and put our buy limit at 11:02:25. So on my time here, that was about 7:25 in the morning, and you can see that the market really didn't fill this trade until almost an hour later. So our trades, sometimes we need to get in them and will get filled very, very quickly after they're set up for us. Sometimes they get set up like this, we put the order in, it might take some time for us to actually get filled. As long as our setup is still valid, and the setup remains valid, and the up arrow will continue to show. So we like to consider what we have built here in our software is trades that will show in real time, and they not only show the direction, the up and down arrow, the buy or sell, but also exactly at what price to get in. I know you can't see it very clearly at the moment, but as soon as that up blue arrow formed around 7:25 this morning, my time, of course I'm on West Coast time, Pacific time, so as soon as that market came down and touched onto that price, it was there was also a blue dashed line that extended from the up blue arrow until our entry price is hit. Now, as we know, sometimes just because your entry price is hit, you might not get filled. But our software will stop that blue line, that dashed blue line. And when this trade is over, I will show you this, because then the markings on the chart here where the trades, where the stop and limit orders are, and where the entry is, will no longer show, and it'll be a lot clearer to see that dashed blue line. So we're really just trying to devise trades that follow the auction process as best we know how, and we try and put that in sync with what we think is happening on a longer time frame basis, or a day-to-day, intraday basis. And so our software here, you can see the green down at the bottom. There's a horizontal stripe, and you can see that at the beginning of the day it was gray, or what we consider to be neutral, and then just before 7:30, just about the time we had our blue up arrow to get into a long trade, or to set us up for a long trade, our filter, that we call it, that band at the bottom, turned green. So our preference is to trade with a green filter, which is our intraday, or within the current day's directional bias. So if it's green, it's up. Now, going into today, we also had an upward bias on an intraday basis. So obviously that helps. We like to place our trades not just in concert with what we think is happening within the current day structure, but also within a little bit of a larger context, i.e. what we think the auction is doing on an intraday basis. And so going into today, our intraday bias was up, and we now have a green filter. We've had quite a bit of time to put our order in and see if we get filled. We did get filled, so we're still long 2 contracts here. We just come within a tick now of our second objective. So I'm just going to go ahead and move that stop up, so I'm just 1 tick below our entry price. And this is not something I always do. I just think today that it's a Friday. It's still fairly early in the trading day, of course, but Fridays are notoriously light in volume, and as a result, sometimes the market gets a little bit sloppy. So if it were to turn around and take out that interim low down there, that inter-range fractal low, I'd probably not want to be long anyway. So rather than giving that extra 2 ticks on the stop on this time, just going to move it up to 1 tick below the entry price, and lock in at least some profit here on this trade. Now, the software is designed such that the stop will automatically move to break even when the market moves 1.5 points in our favor. So you can see that 1103.75 is 1.5 points, or 6 ticks above our long entry. So if the market should rally here another tick or 2 from, it's at 1103.25 right now. Okay, there, just hit 1103.75. So you can see our protective sell stop is still 2 contracts because we haven't been filled yet, but it has raised it right up to our entry price. So now that the market has moved 6 ticks in our favor, even though we haven't been filled on that sell limit order at plus 1.5 points, our stop will automatically adjust to break even. So that's the way we like to manage our trades. It's perhaps you could consider it a little bit more conservative, but obviously managing your capital is a very important thing to be able to do in trading. So okay, good. So we just got filled on that. So you can see now the stop, it hasn't changed in price. It's still at 1102.25. However, you can see that it has been reduced to just 1 contract. You can now also see better the blue up arrow, and it also gives the entry price. So 1102.25 is the entry price, and the up arrow. So as soon as that up arrow formed, and of course the market at that moment at that time was trading above 1102.25 and stayed above it, like I said, for close to an hour. We had our order in. So as soon as that blue arrow formed, we went ahead and put our buy limit in at 1102.25, which is perhaps one reason why we did get filled when it did drop to 1102.25, and when it hit our price exactly, is that we were, probably pretty well close to the first in line. And so, in some of these trades, when we do have more, well, when it turns out that we end up by having more time for the trade to get filled, we are going to be further up the line, closer to the first position, to get filled should the market come down and just hit our price like it did today. So, at any rate, the dashed blue line, really can't see it just at the moment. It's the red line there where our stop is, which is also our entry price, is obscuring it, but I'll definitely make sure I show it to you here on this video once this trade has completed. Looks to be a little bit quiet here. I don't want to make this video too terribly long, so I'm just going to give it maybe another 30 seconds or so, and if it doesn't really do much here, then I'll probably put it on pause, and when it gets closer to one of our objectives, whether it's the moving of the stop, for example, the way I have set it up right now is that should the market continue to move higher and move an additional 3 ticks above our second objective, then our stop will also move up 3 ticks. So it hasn't done that yet, and that's why our stop is still resting there. So I'm just going to put it on pause right here. Okay, and I brought it back. So here we are. It's a few minutes later, and you can see the market looks like it wants to come down and maybe stop us out. So we still got the one contract there, and we'll see if we get lucky, it'll turn around and start to rally. Otherwise, we'll get stopped out for break even on the final 1/4 of our position. We've already, of course, made our profits on our first 2 contracts at plus 3 ticks each, and plus 6 ticks on the third contract. So we've got a total of plus 12 ticks in the trade right now, and should we get stopped out on this, then that will be it. We'll obviously have to pay the commission as well, but looks like it wants to come down and stop us out. Okay, so we got stopped out, so 0 or break even on that final 1/4 of our position. But I just wanted to, so you could see very clearly the up arrow and where that dashed blue line starts, and it will continue until the market comes back down and touches onto that price, which in this case is exactly where we got filled. So anyway, that's just an example of one of our basic trades. I hope you enjoyed it, and that'll be it for now.